Welcome to Finance with Abram. Today I want to give you my top 5 favorite best ETFs for growth, dividends, value, and diversification. And I'm also going to be giving you 5 alternatives to those ETFs. So for each ETF I list and talk about, I'm going to give you an alternative just in case for some reason if you don't like the company that provides the ETF, or there's something about the holdings you don't like, or the expense ratio or something like that, then there's kind of a backup that I'm going to present to you and give you the same information for that alternative ETF than the main one that I'll be presenting. And now some of these ETFs I actually own myself, and I'll talk to you about which ones of those I do own and the ones that I'm thinking about owning. So with these ETFs for the long term, there's definitely a possibility to help grow your income and wealth. However, this is not financial advice. This is for educational purposes only. And so if you're wondering what ETFs are a way to invest in the stock market with having a more hands-off approach, a less stressful approach to investing, because what you're buying is basically a basket or a pool of stocks within a certain group or a sector or a location or an index, and then that ETF is pretty much mimicking that index if it's an index. And so they're holding the same kind of stocks and everything, the certain amounts, the weighting of it, whether it be market cap weighting. And so for market cap weighting, it's when an ETF would hold more of a stock that's bigger than one that's less big, basically. So for an example, if you have 3 companies, one of them has a $1 trillion market cap and one has a $500 million market cap and the other one has a $200 million market cap, well, the ETF is going to hold more of the $1 trillion market cap company than the 500 million market cap company. However, they're going to hold more of the 500 million market cap company than the 200 million market cap company. So it's just, that is a market cap weighting basically, where they're going to hold more of the bigger stocks, the bigger companies, than the lower stocks, than the lower companies with less of a market cap. So that is market cap weighting, but there are different weightings of ETFs. And we're going to get into it here with the expense ratios, the top holdings, the inception dates, the average return, the dividends, and all of that information. But I do have a video of what ETFs are and how do they work and the differences between them and mutual funds. I'll link it down in the description. It's almost like an hour-long video, so it's definitely in-depth and more detailed. But in general, ETFs are where you're buying a group or basket of companies and you're pretty much just, it's a hands-off approach way to investing, where you just invest in the ETF. You don't actually own the companies when you invest in the ETF, but you own part of the ETF itself. So that's what you own. The ETF is who actually owns the stocks, but you own the ETF. And of course, the ETF needs your money to be able to own the stocks. So they do have an interest in making sure they perform well or track that index as close as possible, because they definitely want investors to keep investing in their ETF. So they want to have a nice ETF that grows. And so they charge a little bit of expense ratio to cover their cost of managing the fund and everything. And so definitely pay attention to the expense ratios. And I'm going to talk to you about all the expense ratios in these ETFs, because for expense ratios, it ranges. So like, for example, if you have $1,000 in an ETF with an expense ratio of 2%, then that is going to be $20 a fee right there of each $1,000 that you own in that ETF. However, if you have $1,000 in an ETF that has an expense ratio of 0.2%, then that's going to be $2 for every $1,000 you have in that ETF, and so on. Like if it was 0.02%, then that's going to be 20 cents per $1,000 that you own in that ETF. And so it's not in those increments of thousands, but I'm just kind of trying to break it down in a simplified form to let you know how it ranges with that expense ratio fee compared to how much you own in an ETF. So, if you own thousands more, you can kind of times that. For example, if you have $10,000 in an ETF with a 0.2% expense ratio, then that's going to be $20 for that $10,000 you have invested. And so compared to how much you can gain in the ETF, that's very minimum, because you can get like 7, 9, 10, percent return. And so, that much percent compared to 0.2 or 0.02 or even 1% is way less, So expense ratio shouldn't turn you off too much, but it's definitely something to look at when compared to the actual annual average growth that an ETF has, because you don't want that expense ratio to be too high, especially if the ETF isn't growing that much or the dividends aren't that much with that ETF to offset the fees. So without further ado, let's jump into these top 5 ETFs right here. And for the first ETFs, these are broad market ETFs that are going to cover a large group of stocks, because these are ETFs that cover the S&P 500 index, which is the main index, I would say, for the stock market. I know a lot of people look at the Dow and the NASDAQ to kind of gauge where the market is going and where it's been and how it's performing. The S&P 500 companies, so it's a good wide range of stocks and companies in the United States to pretty much gauge where the market has been, where it's going, where it's at right now, because it's not just a certain sector or not just the top big stocks in the stock market. It is a market cap weighting, so they do hold more attention to the bigger companies. However, it's 500 companies. So first, for these first ETFs right here, these are some of the main ETFs that a lot of people hold just to kind of cover the stock market in general and to get exposure to the stock market as a whole in the United States. First up here, we have the Vanguard S&P 500 ETF. The Vanguard S&P 500 ETF seeks to track the investment performance of the S&P 500 index, a widely recognized benchmark of the U.S. and United States stock market performance that is dominated by stocks of large United States companies. And their ticker symbol is VOO. Fund management is by the Vanguard Equity Index Group. The category for this ETF is U.S. large blend, so those large U.S. companies. And the benchmark is the S&P 500 index. The assets under management, which is what the ETF holds overall, how much they hold overall in their ETF, is $686 billion for this ETF. So this one is massive, and it has the same market capitalization weighing as the S&P index, and their expense ratio for VOO is 0.03%. So like I was giving you those examples earlier, $1,000 in this ETF with a 0.03% expense ratio is only 30 cents. So yeah, very low expense ratio. And that's one thing Vanguard is known for their low expense ratios. The dividend yield on this ETF is 1.69%. The inception date when this ETF started was September 7th, 2010. And the total return since inception is 12.52%. So that is the average return for this ETF since it was started back in 2010. So some of the numbers I'm presenting with these ETFs could be different when you see this video, depending on when you see it, because I am recording and editing and uploading this in November 2022. So this Vanguard VOO ETF is an ETF that I actually own and I have been owning here for a little while, and I invest in it weekly. So I have it set up on a scheduled investment where I invest a certain amount of money every Monday into this VOO ETF. And I do that with other ETFs as well. I just kind of spread it out on different days. But this is an ETF that I own, that I will continue owning and continue putting money into. So now let's get into some of the other holdings and performance and ratios of the Vanguard S&P 500 ETF, the VOO. All right, so we're on the website for the VOO Vanguard S&P 500 ETF. Let's get some more information on this one. It's currently trading at $364.11. That is the market price. Year to date, the returns are negative 15.6% because that's what's going on in the market overall right now. It is a negative year for sure. Not as negative as some other ETFs and some other stocks, but yeah, this ETF is down 15.6%. But we're going to look at over the years how it's performed. That's more important if you're going to be holding this long term. And I am a long term investor mostly. I do some swing trades and things like that, but I'm mostly long term. And if you're looking at this video about ETFs, there's a chance you're mostly long term, or at least you're building a portfolio that is a long term portfolio. So these ETFs can definitely help in that regard. Of course, the net asset value price is going to be pretty much around the same as that market price, so $363.94. And of course, these prices and some of these ratios are going to change a bit when you see them, because I'm recording this over the weekend right now while the market is closed. And so those are the numbers I'm going to be pulling for the video right here. And you'll see right here on the performance. So you've got the recent performance, year to date, we're down negative 17% right here, showing for the market price and the net asset value, the NAV. And there's the benchmark right here, the S&P 500. So but look at the 3-year. 3-year, we're up 10.16%, 5-year, 10.4%, 10-year, 12.7%, and since inception, 13.15%. So actually a little bit higher than what I reported on the earlier part of the video with that part, because when I created that and I recorded that section, it was around 12%. But right now, recording this in November on the weekend right here, since inception, the VOO is up 13.15%. So yeah, that is a great thing to look at when you're investing long term. Don't focus too much on the short term, what's going on this past month, this past 3 months, this past year. Longer term, 3-year, 5-year, 10-year, that average since inception right there. And so you're going to have the up years. You're going to have, years like in the previous years. You're going to have the down years like this current year, 2022. And even in the past 3 months, it's down 5%. So, month end right now, 7% up. So, and 8% on the net asset value right there. So it's going to be around in a market like this with so much volatility. ETFs can bring some more stability, and you might not be down as much, or you might not be up as much as certain individual stocks, but overall, investing in ETFs, especially if you're dollar cost averaging, investing during the down times, investing during the kind of sideways times, investing during the up times, you get that average price where you're not just buying when it's high or just buying when it's low. Now, if you could time it somehow where you're just buying when it's low, of course, you're going to be doing better than dollar cost averaging throughout the years and throughout the months and everything like that. But that's typically not an easy thing to do, especially for ordinary investors and everything. And even for experienced investors, picking the bottoms, like that's not common for sure. Yeah, you can get lucky. I've gotten lucky myself picking bottoms, out of stock stocks and ETFs and things, but that's not what I'm going for. Yeah, I might buy more of something when things are down for sure, like certain stocks and ETFs when the market's really crashing. Yeah, I tend to buy more of my stocks that I really like and try to put a little bit more in ETFs that I really like during those times. But overall, I'm still going to be investing throughout the years, up and down. And so back to this ETF though, because I definitely can get sidetracked and start talking about investing. You know that if you've looked at any of my previous videos, but we're going to get back on track. The VOO here. All right, 52-week high of $439.25. 52-week low of $327.68. Of course, when you're buying an ETF, just like stocks, you don't have to buy a whole share amount if you have a broker that you can buy fractional shares with. So you don't have to buy that whole amount each time. You could throw, $50 at this, $20 at this, $100 at this, and just kind of build it up over time. And so right here, the 30-day SEC yield is 1.63%. A non-money market fund's SEC yield is based on a formula developed by the SEC. The method calculates a fund's hypothetical annualized income as a percentage of its assets. A security's income for the purpose of this calculation is based on the current market yield to maturity for bonds or projected dividend yield for stocks of the fund's holdings over a trailing 30-day period. This hypothetical income will differ at times significantly from the fund's actual experience. As a result, income distributions from the fund may be higher or lower than implied by the SEC yield. The SEC yield for a money market fund is calculated by annualizing its daily income distributions for the previous 7 days. So that's the SEC yield right there. That's a yield you'll see with ETFs and everything. It's got 503 stocks in it, just like the benchmark right there. So around that 500 mark with the S&P 500. And the PE ratio right now, 19.5, right along with the benchmark. And the price to book ratio is 3.7. Return on equity, 22.3%. Let's get to this holdings right here, the exposure. As you'll see with the VOO, you got about 7.4% communication services, 10.9% in consumer discretionary, 6.9% in consumer staples, 5.4% in energy, 11.4% in financials, 15.3% in healthcare, 8.3% in industrials, 26.3% in information technology, 2.5% in materials, 2.6% in real estate, and 3% in utilities. So you see heavier in the information technology, the healthcare, the consumer discretionary, and the financials right there, along with some other communication services right there. That's the breakdown of the sectors that this ETF is invested in, along with the benchmark, of course. And so for their top holdings here, we have Apple, Microsoft, Amazon, Tesla, Alphabet, which is Google, Berkshire Hathaway, United Health Group, Alphabet, also Google. You have the GOOGL and then the GOOG, the voting and the non-voting shares. And then you have the Exxon Mobil Corp and you have Johnson & Johnson. So those are the top holdings of this ETF. And you'll see the breakdown right there of the fund percent. So you have, 7% of Apple and 5% of Microsoft. You go down a little bit, okay, you've got 1.58% of United Health. And then at the bottom right there for Johnson & Johnson, you have 1.39% Johnson & Johnson. But that's not all the holdings. That is that are the top 10 holdings of 503. For example, you go to page 2. It's a lot of companies you're going to recognize, of course, here. These are major companies or major corporations. This is a way to get exposure to all those major corporations. You got JP Morgan, Nvidia, Visa, Chevron, Procter & Gamble, Home Depot, MasterCard, Pfizer, AbbVie, Eli Lilly, so on and on. So as you'll see right there, the percentages are going down as far as how much of these stocks right here, of these shares of these companies that this ETF holds, because of the market capitalization. We'll wrap that up for the VOO ETF. Let's go to an alternative of the Vanguard S&P 500 ETF. And so as an alternative to the VOO ETF, we have the SPDR, the SPDR S&P 500 ETF. Now this ETF seeks to provide investment results that before expenses correspond generally to the price and yield performance of the S&P 500 index. The S&P 500 index is composed of selected stocks from 500 issuers and spans over 24 separate industry groups. And the ticker symbol for this ETF is the SPY. The fund management is the State Street Global Advisors. The category is the United States Large Blend, and the benchmark is the S&P 500 Index. So same as the VOO with that right there. The assets under management is the difference right here. Assets under management for the SPY is $353 billion. So yes, still a massive ETF, but you see pretty much half the size of the VOO overall. So there's more money invested in the VOO than the SPY. However, the SPY is massive as well. A lot of people hold this ETF as well. Definitely one of the most popular ETFs. And this ETF also has the same market capitalization weighing as the S&P 500 index. The expense ratio for the SPY is 0.0945%. The dividend yield is 1.69%. The inception date when this ETF was started was January 22nd, 1993. And this was the first ETF listed in the United States. And the total return since inception is 9.35%. 0.5%. So that is the average return of this ETF right here for the SPY since it was started back in 1993. So that's a lot. A lot of times you'll hear people say, I'm not going to invest in individual stocks unless I get more than 9% out of it, because if not, I should just throw my money all in the SPY instead, because I'll get around 9% out of it, because that is the average pretty much return for this ETF right here. And a lot of people just throw money in the SPY and just kind of sit back and let it grow, because they pretty much know or think, it's not guaranteed that 9%, but they pretty much think, okay, I'm going to get around 9% about that. That's going to beat inflation. That's going to be nice growth. I don't think I could beat that with investing in individual stocks. So, and that's totally fine. Like me personally, I invest mostly in individual stocks, but I'm also in ETFs as well. So just to kind of balance out and broaden out my portfolio in general. But let's get into some more information on the SPY with their top holdings, their performance, and more information here. Right, let's get some more information on the SPDR SPDR S&P 500 ETF, the SPY. Right here, currently, the net asset value is $394.12, and we've gone over the expense ratios and the dividend yields and the inception date and everything like that. So we'll get some more information on the other ratios and the performance and the holdings. Right here, we got the price to book at 3.73 right there. Number of holdings 503, right in line with the S&P 500. Price to earnings PE ratio is 17.31%. Estimated 3 to 5 year EPS growth is 11.61%. You see right there that estimated 3 to 5 year EPS growth is based on the underlying holdings of the fund. The actual earnings estimates for the underlying holdings are provided by FactSet, First Call, IBES Consensus, and Reuters, and are used to calculate a mean 3 to 5 year EPS earnings per share growth rate estimate. All right, let's get to the performance here. The past month, this ETF is up 8.08%, the net asset value. And right there up to the quarter, of course, it's just right 1 month in the quarter right here. Year to date, though, of course, 17.76% down right here year to date, but that is for year to date down. But let's go over to 3 year. You see 3 year up 10.08%. 5 year 10.29%, 10 year 12.64%, and since inception of January 22nd, 1993, this ETF is up 9.61% right there. So the inception percentage has changed a little bit since I recorded that other part, but right now we have since inception 9.61% of a return for this ETF, and this is the first ETF in the United States, January 22nd, 1993, when it was started. And so now let's get to the top holdings of this ETF right here. This is pretty much going to be exactly the same as VOO. There's just a different amount pretty much of the shares that this ETF holds compared to VOO, because VOO has more assets under management. There's more investments in the ETF of VOO. More money has been put into that. More investors have put more money into VOO than the SPY, which that's not any, knock or dig on the SPY. The SPY is a massive, major, very popular ETF. And their top holdings right here, you got Apple, Microsoft, Amazon, Alphabet Class A, which is a Google, Berkshire Hathaway Class B, Alphabet Class C, Tesla, United Health Group, ExxonMobil, and Johnson & Johnson. And sector allocation. That sector allocation is going to be the same pretty much as VOO. You got information technology and healthcare leading right there. Then you have financials, consumer discretionary, industrials, communication services, and then consumer staples, energy. And then you have the utilities, materials, and real estate, rounding it out right there as far as the sector breakdown. That is the fund sector breakdown, which is pretty much going to mimic the index sector breakdown, because that's what this ETF wants to do, is mimic the S&P 500. So you'll see right there, pretty much right in line, slightly off, 2.65%, or is that 2.64, slight 26.53% information technology, 26.52% information technology. So you see just a little rounding error basically. And those are some of the highlights right there for the SPY ETF on their website. All right, now it's time for my next top 5 ETF, which also incorporates growth, dividends, value, and diversification. However, this one has a focus on dividends. The Schwab US United States Dividend Equity ETF. This fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. This index is focused on the quality and sustainability of dividends. Invest in stocks selected for fundamental strength relative to their peers based on financial ratios. The ticker symbol for this one is SCHD. Fund management is by Charles Schwab Asset Management. The category is U.S. large value. The benchmark is that Dow Jones U.S. Dividend 100 Index. The assets under management total is $39.5 billion worth. And this one is market capitalization weighted, meaning the larger companies with the larger market caps are going to be more of this fund's holdings. The expense ratio is 0.06%. The dividend yield is 3.42%. The inception date was October 20th, 2011, and the total returns since inception is 13.71%. Yes, that is awesome. This is definitely one of my favorite, if not my favorite ETF. It's pretty much kind of like a tie between this one and the VOO for me personally. This is an ETF that I own and I do invest in regularly weekly. I have it set up on a schedule along with VOO and a couple other ETFs that I invest in weekly. So definitely one of my favorite ETFs right here. And there's other ETFs I like to kind of broaden out and diversify my own portfolio. However, this Schwab US Dividend Equity ETF is definitely one of my favorites. It's different than VOO, obviously, because VOO, follows the S&P 500, whereas this one is more closely in line, of course, with that Dow Jones US Dividend 100 Index with the focus on dividends. So, but yeah, and I'm a dividend investor myself, a long-term dividend investor, I would say. I like the growth stocks, of course, and I like the value stocks, which, that kind of goes into dividends often. But like dividends, they are, yes, I don't invest just for dividends, but I do have a bias towards dividend paying companies with strong cash flow. And so now let's get some details on the Schwab US Dividend Equity ETF SCHD from their website right here. Currently right here, this ETF is trading at $76.87. And you have the volume right there. You've got the premium discount of where it's trading at above or below, right? Pretty much 0.01% right here for this one. And you got the price to earnings ratio of 13.4%, price to cash flow at 9.5, return on equity at 35.44%, price to book ratio at 3.2, SEC yield at 3.31%, SEC yield at 3.31%, and distribution yield at 3.36%. Let's look at the performance here. All right, so for the month right here, this ETF SCHD is up 11.21% for the past month. So it has had a massive gain in this past month, because you can look at it year to date, you're only down 6.23% right here in this ETF, for 6.24%, depending on if you're looking at the market price or the net asset value, which is going to be pretty much right in line with each other. So this ETF, as you see, not down as much as some of the other ETFs, and definitely not down as some of these other stocks. So that is the risk reward you got going on with the ETF. You throw a lot of money at individual stocks and that's it. Yeah, you may do great. Definitely, you can definitely do great depending on what's going on and everything. But then if that stock collapses, that is it right there. Your portfolio will tank. So if you got to broaden out the portfolio, have some diversification going on, because right now this ETF only down negative 0.6% year to date, already up 11% on the month. So it's gaining traction, gaining ground right here. So yeah, for 1 year you're down negative 1.43%. You're almost back to break even right here in a year. And you know how rough this year has been right here in the stock market. 3-year annualized return on this one, you got 13.8%. 5-year, you got 12.3%. 10-year, you got 13.4%. And since inception right there, you got 13.71% for the SCHD. That is awesome right there. Let's go down to the sector breakdown and the holdings here. And so for the top holdings here, you've got Merck, Amgen, IBM, International Business Machines, Texas Instruments, Pfizer, Home Depot, Pepsi, Cisco, Broadcom, and Lockheed Martin. And you can see the percentages right there of holding. You got 4 to 3% right there in that range for the top 10 holdings right there, because the market caps are pretty much almost in line right here with these right here. In the sector breakdown here, you got information technology at 21.1%, financials at 20.51%, consumer staples at 14%, healthcare at 12.48%, industrials at 11.27%, consumer discretionary at 6.56%, communication services at 5.38%, energy at 5.15%, materials at 3.15%, and utilities at 0.35%. That is the sector breakdown right here. Of course, mostly stocks, 99.9% in stocks, a little bit of cash right there, 0.10% asset allocation. All right, so those are some of the highlights right there for the SCHD ETF. And as an alternative to the SCHD ETF, there is the iShares Core Dividend Growth ETF. This ETF seeks to track the investment results of an index composed of United States equities with a history of consistently growing dividends, holding companies that have a history of sustained dividend growth and that are broadly diversified across industries. The ticker symbol for this ETF is DGRO. The fund management is by BlackRock. The category is US Large Value. The benchmark is the Morningstar US Dividend Growth Index. The total assets under management is $23.8 billion. This one is weighted by dividend dollars, so it's going to be based off of that amount of dividends that are paid for the company. That's how it's going to determine the holdings and everything and how much they hold of a certain company compared to the other companies. And the expense ratio is 0.08%. The dividend yield is 2.3%. The inception date was June 10th, 2014, and the total return since inception is 9.7%. Now let's get some more details of this iShares Core Dividend Growth ETF. And now let's pull some data from the website of the DGRO iShares Core Dividend Growth ETF. So currently the net asset value is at $50.83. So let's get to the performance right here. Average annual return, 1 year is down 9.53%, 3 year up 6.82%, 5 year up 9.02%, and then since inception right there, you got that 9.7%. So that is the performance. Of course, like I say, this past year, pretty rough. Look over at long term and you're up right here. This ETF is up as well long term. This one hasn't been around as long, so there is no tenure right here. The 30-day SEC yield on this one is 2.48%. Number of holdings in this ETF, 413. You got a PE ratio of 16.08%, a PB, price to book ratio, of 3.01%. Now let's look at some of the holdings and sectors in this ETF. The top holdings in this ETF, you have JPM, JP Morgan, Johnson & Johnson, Microsoft, Apple, Pfizer, Procter & Gamble, Home Depot, Merck, Broadcom, and Coca-Cola. And of course, the list goes on and on out of that 417 holdings right there. As you see on the next page, you got Pepsi, Bank of America, Cisco, United Health Group, Intel. So you got some of the same holdings, of course. You're going to have many of the same holdings as the SCHD ETF, just a different amount of the holdings as far as the ratios of percentages that is taking up in the ETF. So the ranking is going to be a little bit different and everything with that. And now for the sector breakdown here. So for financials in this ETF, you got 20.81% financials, 19.38% information technology, healthcare coming in at 17.06%, industrials at 13.37%, consumer staples at 11.20%, consumer discretionary at 7.61%, utilities at 4.14%, materials at 3.05%, communication at 1.66%, energy at 1.35%, cash and or derivatives at 0.37% right here. So it's good to look at of course, the top holdings of the ETFs to kind of see what they hold, the percentages and everything. And it's also really good to look at the sector breakdown. That way you know how much exposure you get into certain sectors. Maybe you need more exposure to healthcare or consumer staples. So there are sector specific ETFs, which I also invest in to kind of broaden out my portfolio. And that's one way to do it for sure, is sector specific ETFs. However, with broad ETFs like this, there's a way to also diversify your portfolio and see maybe you need more healthcare, more consumer staples, and you also want to be focused on dividends. And you look at certain ETFs like this with the DGRO or the SCHD. So definitely look at the sector breakdown when investing in ETFs, along of course with the top holdings. And so those are the highlights right there from the website for the DGRO ETF. And for my next top 5 ETF, this one has a focus on technology. And with that in mind, that means it also in turn has a focus on growth. And this ETF is the Invesco QQQ ETF. This ETF tracks the NASDAQ 100 index. By doing this, it delivers exposure to companies that are at the forefront of transformative long-term themes such as augmented reality, cloud computing, big data, mobile payments, streaming services, electric vehicles, and more. So definitely in that technology realm. The ticker symbol is QQQ. The fund management is by Invesco Capital Management. The category is US Large Growth. The benchmark is the NASDAQ 100 index. The assets under management total is $155.15 billion. And this one is market capitalization weighted. The expense ratio is 0.2%. The dividend yield is 0.7%. The inception date is March 10th, 1999. And the total return since inception is 8.1%. So yeah, this one has been around for a while. It's definitely one of the most popular ETFs out there. When investors think of a technology ETF, this is definitely one of the first ones to come to mind, the QQQ. I'm sure you've heard it before. If you've heard, CNBC or, Bloomberg or certain, outlets like that in the finance realm and everything and investing, you may have heard the QQQ, Invesco QQQ, or maybe you've heard the commercials or something. But yeah, Invesco QQQ is definitely one of the ETFs to own if you want exposure to technology in that growth sector of technology, because that is where a lot of growth can be found and has been found in the past and definitely in in the future. Technology. This is an ETF that I own personally and that I invest in weekly, the Invesco QQQ. Let's get into some more details of it. All right, so now we're on the website for the Invesco QQQ ETF. Let's get some more information on some of these ratios, performance, and the holdings. So right here, you got the net asset value at $284.75. The last trade right here for this ETF of the day back on November 18th was $284.82. The SEC 30-day yield is at 0.77%. The price to earnings ratio at 21.05%. The price to book ratio at 6.55%. The return on investment at 46.45%. And as the performance, of course, right here, year to date, this one is down massive because technology has taken a major hit right here in 2022. So year to date right here, the net asset value of this fund right here is down 29.75% right there. And so the fund market price is going to be around the same amount right there. So down 29% of year to date right here. Let's look at it a little bit more long term though. Let's zoom out. Let's look at it long term. 1 year, yep, still down. Of course, year to date, it's almost a year. So down negative 27%. But let's zoom out and look at it long term here. So 3 year, this ETF is up 12.8%, 5 year up 13.6%, 10 year up 16.7%, and then since inception up 8.1%. So yeah, definitely vast difference. Rough year right here for sure, but zooming out long term, yeah, it looks nice, of course. And then you thinking about the future, where do you think technology is going to go? Where do you think these major companies are going to go? Let's get to the top holdings in sector right here of this ETF. All right, so sector allocation, of course, we're mainly going to be in technology right here. As you see right here for the QQQ, information technology takes up 50.7% of this ETF right here. And then you have communication services at 15.2%, consumer discretionary at 14.15%, healthcare at 7.62%, consumer staples at 7.05%, industrials at 3.85%, and utilities at 1.42%. So yes, heavy in technology. And then you have some other healthcare, consumer staples, which a lot of those companies are also in the technology realm as well. And so top holdings for the QQQ, we've got, surprise, surprise, Apple, Microsoft, Amazon, Alphabet, Google, Alphabet again, got two, got the GOOG and the GOOGL, Tesla, Nvidia, Pepsi, Costco, and Meta Platforms, formerly known as Facebook. The stock itself used to be just Facebook FB, but now they are Meta Platforms, META. So yeah, those are the top 10 holdings right there for the QQQ. So the main top two holdings right here, Apple and Microsoft, make up a combined 23.73% of this ETF. So 23.73% of this ETF lies in the hands of two companies right there, but two amazing, large, massive companies, Apple and Microsoft right there. And then you have, Amazon at 5.38%, and then you have Google right there at 3.38%, and then 3.28%. So that is Alphabet right there combined at 6.66%. For the combination of the 3.38 and the 3.28% right there of Google, of the total percent of the fund right here. So yes, heavy in two companies for sure, and then heavy in technology for sure to round it out. But those are the top 10 holdings of the QQQ. All right, so those are some of the highlights for the QQQ ETF. And as an alternative to the Invesco QQQ, we have the First Trust NASDAQ 100 Equal Weighted ETF. The objective of this ETF is to replicate as closely as possible before fees and expenses the price and yield of the NASDAQ 100 Equal Weighted Index. The ticker symbol is QQEW. The fund management is by the First Trust Advisors. The category is U.S. Large Growth. The benchmark is the NASDAQ 100 Index. The total assets under management is $1.1 billion, and this one is equally weighted, and the securities are initially set at a weight of 1%. And so the thing that stands out with this ETF compared to the Invesco QQQ, because they both track that NASDAQ 100 index. However, this one, the QQEW, is equal weighted, so not market capitalization weighted. It doesn't favor or hold more of companies that have a larger market cap. You're not just going to have, like Apple and Microsoft at the top as the main largest holdings, and then have, less and less holdings as it goes down the list of their holdings because of the market capitalization going down with the other companies. And nothing against, of course, Apple or Microsoft. Those are two amazing companies that I own personally. But, I actually got out of Microsoft earlier this year, but I do want to get back in. But Apple is definitely one of my top holdings for sure, and I will add more to it. But anyways, this is not about me adding more to Microsoft or Apple. Both are amazing companies. I own Apple, and I definitely want to get back into Microsoft, just kind of watching the price action and everything. But anyways, so if you wanted, the exposure to technology, but you didn't want to put too many of your eggs in a basket, so to speak, with the larger market cap companies, and you just want to kind of spread it out evenly, then the QQEW is definitely the way to go. And the expense ratio on this one is 0.57%. The dividend yield is 0.62%. The inception date is April 19th, 2006. And the total returns since inception is 9.9%. So yeah, you see some differences there with the yield and ratio compared to the QQQ, and also the total returns. So that is the thing with this ETF, is that, if something major happens in the price action of those larger companies, this ETF would be affected less than the QQQ. However, on the flip side, if something major happened in a good way with those larger companies that really drove the price up even more, then this ETF wouldn't grow as much as the Invesco QQQ, because it has just that plain, solid weighting of those companies with the other companies and everything, whereas the QQQ has more holdings of those larger companies. So there is a balance, there is a pros and cons to each one for sure. But let's get into more details of the QQEW ETF. All right, so now we're on the website of the First Trust NASDAQ 100 Equal Weighted Index Fund QQEW ETF. Let's get some information on it. And so the closing net asset value, $92.49, and the closing market price of $92.43 as of November 18th, 2022. The price to earnings at 21.74%, price to book at 4.31%. Price to cash flow at 15.89, price to sales at 3.04. Top 10 holdings right here, you see around 1%. You've got Biogen, Moderna, Gilead Sciences, Intuitive Surgical, Netflix, Amgen, ASML Holding, Dexcom, Nvidia, and PACCAR, PACCAR. And so those are the top 10 holdings, but as you'll see, the percentage of the fund for those holdings right there are all around that 1% mark, because this is the equal weighted ETF. And so for the sector breakdown here for this ETF, technology is at 40.07%, consumer discretionary at 20.2%, healthcare at 14.59%, industrials at 10.25%, consumer staples at 6.29%, telecommunications at 3.99%, utilities at 3.56%, and basic materials at 1.05%. And looking at the fund performance right here, the 3-month, you're down 4.13%, 4.1%. Year to date, of course, down 29%. So very much down year to date, along with technology, as I was talking about earlier. That 1 year, pretty much almost like the year to date, you're down negative 24%. However, zoom out, you got the 3-year, you're up about 8.5%. 5-year, this ETF's up around 9% right there. 10-year, up about 13.1%. And then since inception, up 9.6%. So yeah, year to date, 1 year, this ETF is down, but zooming out long term, like the other ETFs, it is up positive. And so those are the highlights from the website, the QQEW ETF. And my next top 5 ETF has a focus on real estate. Two of the best drivers and creators of growing wealth and income are the stock market and real estate. So in this instance, we're pretty much going to be combining both with investing in real estate, because the other ETFs on this list have very low exposure to real estate. The first ETFs I was talking about, the VOO and the SPY, they have some real estate exposure for sure right there. Not that much. And in the other ETFs, it's almost non-existent. So with the real estate ETF, you can really definitely broaden out your portfolio and bring in that real estate, which, has a mix of value, of growth, and dividends, and of course the diversification of having more real estate stocks in your portfolio. And with that being said, let's get to the real estate ETF. We have the Vanguard Real Estate ETF. This ETF invests in stocks issued by Real Estate Investment Trust, REITs, which are companies that purchase office buildings, hotels, and other real property. The goal of this ETF is to closely track the return of the MSCI US Investable Market Real Estate 25/50 Index. And the ticker symbol is VNQ. The fund management is by the Vanguard Equity Index Group. The category is U.S. Fund Real Estate. The benchmark is the MSCI US IM Real Estate 25/50 Index. And MSCI stands for the Morgan Stanley Capital International. And I'm going to tell you a little bit more about this index right here, because it's well known in the finance realm for sure, and investing realm for sure, but it's not, as well known, of course, as the S&P or the Dow Jones or the NASDAQ. So the MSCI US IM Real Estate 25/50 Index is designed to capture the large, mid, and small cap segments of the U.S. equity universe. All securities in the index are classified in the real estate sector as per the Global Industry Classification Standard. The index also applies certain investment limits to help ensure diversification, limits that are imposed on regulated investment companies or RICs under the current U.S. Internal Revenue Code. So one requirement of the RIC is that at the end of each quarter of its tax year, no more than 25% of the value of the RIC's assets may be invested in a single issuer, and the sum of the weights of all issuers representing more than 5% of the fund should not exceed 50% of the fund's total assets. So it keeps that going on right there just to kind of help the diversification and the holdings and everything within this group. And this ETF holds all stocks in the same capitalization weighting as the index, so it's market cap weighted with those rules in mind. And the expense ratio is 0.12%, so 0.12%. The dividend yield is 3.76%. The inception date is September 23rd, 2004, and the total returns since inception is 7.45%. Now let's get into more details of the Vanguard Real Estate ETF. All right, so we're on the website for the VNQ Vanguard Real Estate ETF. Let's go over some of the ratios, performance, and its holdings. Right now, the net asset value price of this ETF is $85.50. Market price right around that same amount, of course, $85.56. And looking at the performance right here, month end is up about 3.4%. And 3-month total, of course, is down negative 15%. Year to date, of course, down negative 26%. Yeah, rough year, that's like I've been saying. So this 1 year right here, down negative 21%. And then, however, started zooming out, things start to get better for sure. 3-year, only down 0.85%. Zoom out some more, 5-year. VNQ is up 4%. Net asset value, VNQ 3.99%, right around the same of that market price, of course. And then 10-year is up 6.6%. And then since inception in September 23rd, 2004, up 7.4%. So yeah, this one got to zoom out a little bit more to start seeing the gains and the growth on this one. This one is definitely sector specific. So it's definitely linked very closely, 100% closely to real estate. So in the times of the real estate boom, this ETF is going to definitely go up. There's going to be some nice gains. But in the times of the real estate bust, when things aren't going well in real estate, this ETF is definitely going to take a hit. So this is the ETF that, of course, should not be 100% of any portfolio, not even 50% of a portfolio. Definitely part of a portfolio that has exposure to a lot of other sectors for sure. You need that technology, you need that finance, you need the energy, you need utilities, consumer discretionary. You're going to need those other sectors for it right there for sure to broaden this out, because you just don't want to be 100% in real estate. All right, so what's some of the ratios here? The PE ratio, price to earnings ratio, currently is 24%. Price to book PB ratio is 2.3%. Return on equity of 7.9%. And the total holdings, the total number of stocks in this ETF, 166 stocks right here in this ETF, with the benchmark being at 162, so right around that amount. Earnings growth rate at 10.9%. This median market cap of this ETF is 23.6 billion. So the medium average market cap overall of the 166 holdings is 23.6 billion. And so let's get to the sector specific breakdown of this ETF right here. So diversified real estate activities at 0.10%, diversified REITs at 3%, healthcare REITs at 7.5%, hotel and resort REITs at 3.10%, industrial REITs at 12%, office REITs at 5.8%, real estate development at 0.2%, real estate operating companies at 0.4%, real estate services at 3.8%, residential REITs at 14.20%, retail REITs at 12.40%, and specialized REITs at 37.4%. So that's the breakdown right there. All, of course, involved in real estate REITs, real estate investment trusts, is broken down into different types of real estate investment trusts. So not just hotels, not just healthcare, not just industrial, heavy on the specialized and the industrial and the residential and retail REITs, but however, not too heavy in a sense. So you see that 37% is the highest, but then it's got some other double digits, 14, 12, 12, then you go down to 7, 5. So it's diversified in real estate for sure. So with the holdings of this ETF, at the top, you've got the Vanguard Real Estate Index Fund Institutional Plus shares at 11.93%, Prologis at 7.26%, American Tower at 6.71%. Then you have Crown Castle International, Equinix, Public Storage, Realty Income, Simon Property Group, SBA Communications Corp, and then Digital Realty Trust. So that's the breakdown right here. You got the top fund at 11.93%. You go to 7, 6, 4, 3, 3, 2, 2%. So it's broken down like that of 166. You go to the next page here of their holdings. You got Vici, VICI Properties, Well Tower, Avalon Bay, Extra Space. So you got some storage, you got industrial, you got retail, you got different sectors for sure going on with this ETF for sure. All right, so those are some of the highlights from the website of the VNQ ETF. And as an alternative to the Vanguard Real Estate ETF, we have the Schwab US REIT ETF. So the Schwab United States Real Estate Investment Trust ETF. This fund's goal is to track as closely as possible before fees and expenses the total return of an index composed of United States Real Estate Investment Trust classified as equities. The ticker symbol is SCHH. The fund management is by the Charles Schwab Asset Management. The category is U.S. Fund Real Estate. The benchmark is the Dow Jones Equity All REIT Capped Index. The total assets under management, $5.7 billion. And this one is market capitalization weighted. The expense ratio is 0.07%. The dividend yield is 2.55%. The inception date is January 13th, 2011. And the total return since inception average is 6.37%. Now let's get into some more details of the Schwab US REIT ETF. And so with these two ETFs, these are two ETFs I'm definitely looking closer at. I don't own either one of these real estate ETFs, but I'm definitely looking into furthering out my portfolio with real estate investment trusts. And I'm kind of looking, I do own Realty Income, ticker symbol O. And that's a great company and everything. I'm not going to go into too much detail about that because that's an individual stock. And this video is about ETFs. But let's get into more details of the Schwab US REIT ETF. And so now we're on the website for the Schwab US REIT ETF. Let's get some more information on this one. And the price of this one currently was at $19.80. You got a price to earnings ratio of 26.52% on this ETF, price to cash flow at 15.65, return on equity at 15.70%, price to book ratio at 2.02, net asset value at $19.61, total holdings of this fund 135. All right, so now let's look at the performance of the SCHH ETF. Here, as you can see right here, the 1 month, you're up about 3% right there. 3 month, down 15% around right there. Year to date, you're down around 25% of this ETF right here. 1 year, down 19% of this ETF. 3 year, down 4% on this ETF. Then it starts to get positive. 5 year, up just 1.6%. 10 year, up 5.2%. And then since inception, up 6.3%. So just like that VNQ ETF, this one, of course, is real estate. So it's definitely tied to the real estate market with its ups and downs. And real estate sometimes has very high ups and very low downs, so it can definitely fluctuate right there. This is definitely one, like I said with the VNQ, just like that one, you definitely want to have other holdings for sure, other individual stocks if you're doing other individual stocks, or other ETFs, or both, not just going to be in real estate completely. So top holdings of this ETF, you have Prologis, American Tower, Equinix, Crown Castle, Public Storage, Realty Income, Simon Property Group, Digital Realty Trust, SBA Communications, and Welltower. So several of the same stocks as the VNQ ETF, just different amount in the percentage of the holdings right there. As you see, starts at pretty much 8.63% with Prologis REIT, and then going down to Welltower at 2.57%. So you have that spread right there for the top 10 holdings. And so for the sector breakdown on this website, on the Charles Schwab, they just have like real estate 100% right here. So the sector overall real estate, they didn't break it down like the VNQ did with these certain types of real estate, different types of REITs and everything like this. But for the sector breakdown on the SCHH ETF on their website, they have it at just real estate 100%. Of course, there's different types of real estate in this ETF, not just, one type of real estate for sure. We'll just look at some more of the holdings here so you can kind of see that. You see it from the top 10 holdings, but going past the top 10 holdings, you'll see, Welltower, of course, was at number 10 right there. You got Vici, Avalon Bay, Alexandria Real Estate, Equity, Extra Space. So you'll see, Sun Communities, Iron Mountain, Health Peak, Gaming and Leisure Properties, Camden Property Trust, Boston Properties. So you see Life Storage, you see various different types of REITs right here. So this one is diverse in the REIT sector for sure. In the real estate sector, it's diverse. Outside of real estate, no, it's 100% real estate. But within real estate, it is diverse. And those are some of the highlights from the SCHH ETF. And now for the last of the top 5 ETFs, we have a focus on international and foreign stocks, because with diversification, so far, all of the other ETFs have had a focus on the United States, which of course is a great place to have a focus on in the stock market. I mean, you can just look at the historical returns of investing in great quality United States stocks. It's is amazing. So definitely. However, to add more diversification to a portfolio, one way to do that is to gain exposure to international companies. And with that in mind, let's get to the next ETF and my top 5 ETFs with a focus on international, which can bring in some growth, and there's some dividends as well going on, and maybe some value, and definitely that diversification going on, with more of a focus on that diversification with them being international focused. So first up here, we have the Vanguard FTSE Emerging Markets ETF. Now this ETF seeks to track the return of the FTSE Emerging Markets All Cap China A Inclusion Index. It invests in stocks of companies that are located in emerging markets around the world, such as China, Brazil, Taiwan, and South Africa. The ticker symbol is VWO. The fund management is by the Vanguard Equity Index Group, and the category is Diversified Emerging Markets, and the benchmark is the FTSE Emerging Markets All Cap China A Inclusion Index, and the FTSE stands for the Financial Times Stock Exchange Group, and the FTSE is currently owned by the London Stock Exchange Group, and in May of 2015, the FTSE Group combined with the Russell to form the brand name FTSE Russell. So the FTSE 100 is generally the most well-known of the FTX indexes, but the FTSE Group manages hundreds of other indexes like this one right here. And the total assets under management for this ETF is $61.1 billion. This one is market capitalization weighted. The expense ratio is 0.08%. The dividend yield is 4.07%. The inception date is March 4th, 2005, and the total returns since inception is 4.5%. Now this is an ETF that I do own personally, that I do invest in weekly to gain exposure to the international sector and everything. Let's get into more details of the VWO ETF. All right, so now we're on the website for the VWO Vanguard FTSE Emerging Markets ETF. Currently, the market price of this one is $38.96 with the net asset value price at $38.83. And the performance right here, the VWO for the month end is down negative 2.7%. For 3-month total is down around 13%. Year to date down around 26%. 1 year down 27.6%. 3-year down 2.7%. 5-year down 1.85%. 10-year up 1.2%, and then since inception up 4.5%. So yeah, this one has had a rough time for sure in the past few months right here, and well, not past few months, the past few years right here for sure. When you start investing in emerging markets, there's definitely more risk going on right there with emerging markets and the way foreign policies and different things are handled. Total number of stocks in this ETF, you got 5,577 stocks in this ETF, with the benchmark holding 4,459. So a lot of holdings in this ETF for sure. The median market cap is at 15.8 billion. So the average middle market cap, you take all the market caps of all the companies and you get an average, the median right there is 15.8 billion. The earnings growth rate at 12.5%, the PE ratio at 9.7, the PB price to book ratio at 1.8, the return on equity at 14.2% right here. And when you get to the exposure, the regions that this ETF is invested in, this is 99.6% emerging markets and then 0.4% Europe. For the countries and the percentages of the fund for each country right here, you have China at 28.90%, India at 19.70%, Taiwan at 15.70%, Brazil at 7.60%, Saudi Arabia at 5.50%, South Africa at 4%, Thailand at 3.10%, Mexico at 3%, Indonesia at 2.5%, Malaysia at 2%, United Arab Emirates at 1.8%, Qatar at 1.4%, and Kuwait at 1.10%. Turkey 0.9%, Philippines at 0.90%, Chile at 0.70%, Greece at 0.40%, Colombia at 0.20%, Czech Republic at 0.10%, Egypt at 0.10%, Hungary at 0.20%, Pakistan at 0.10%, and Romania at 0.10%. In the sector weightings of the VWO ETF right here, you got basic materials at 9.57%, consumer cyclical at 11.90%, financial services at 21.86%, real estate at 2.68%, consumer defensive at 6.50%, healthcare at 4.68%, utilities at 3.78%, communication services at 8.03%, energy at 5.79%, industrials at 7.47%, and technology at 14.59%. And let's get to the top holdings right here. You got Taiwan Semiconductor, TSM, at 3.9% of this fund right here. Then you have Tencent, Alibaba, Reliance Industries, Infosys, Meituan Dianping Class B, Housing Development Finance, Vale, China Construction Bank, and then Taiwan Semiconductor ADR right there. You have the top percentage at 3.9, and then it goes down to 1. So there's not a real big bulk in any one specific company. Yeah, Taiwan Semiconductor is the main one, but it's not that far off from Tencent and Alibaba. And when you see those percentages, we'll just go to the next page here so you can see those percentages are around about the same. So you have 0.72, 0.61. You've got the Saudi National Bank, the Bank of Central Asia. You got the MediaTek. You got, very JD.com right there, 0.70%. So Tata right there at 0.64%. So it's really spread out. This has a lot of holdings in it right here. Over 5,000, was it? Yeah, over 5,000 number of stocks right here. So very much spread out. And so those are the highlights right there for the VWO ETF. And with the breakdown of my top 5 favorite ETFs, this isn't, of course, an ETF I would even have like 20%. If I had only held 5 ETFs and they were my top 5 favorites right here, the Vanguard VWO ETF wouldn't be like 20% or 30% or 25% of that 5, portfolio. And so, yeah, this might be my top 5 favorite best ETFs overall right now list. However, I would not break it down 20% for each ETF. Definitely not. I would definitely break it down in a different way, where this one right here, the 5th of my top 5 ETFs, would be either at 10% or lower as far as like if I only held those 5 ETFs. I would not be investing as much in this ETF as I would be in the VOO or the SCHD, definitely not, or the QQQ for sure. Those would be the top holdings right there for sure. Then it would start going down with the real estate one being lower and the VWO, this emerging market international ETF, being lower than that even, or maybe around the same amount as that. But I definitely would not be investing as much in an ETF like this compared to an ETF that tracks the S&P like the VOO or the SPY or the SCHD or the QQQ for sure. Definitely would not put this one up on that scale with the other ones as far as how much I would be investing in it. And as you can tell, the performance is definitely the key reason why I would not be doing that for sure, because I want the better performance. I do want the exposure to the emerging markets and the international, but I don't want too much exposure to it. I don't want as much more exposure to it than the S&P or the QQQ or the SCHD, something like that. That's tracking an index like the Dow and dividend index or the S&P 500 or the NASDAQ or anything like that. So I just want to throw it out there because when you see this performance, you might be like, hey, Avron, why is this in your top 5 favorites? This is not doing as well compared to the others. Yes, it's in my top 5 favorites, but if I had to rank these, they would pretty much almost be somewhat in the ranking that I presented them, with 1 being 1 and 2 being 2. Although I say, I like SCHD. I won't say it. I won't get into that, the SCHD versus VOO comparison, because they're different ETFs, but I really like both of them. But this would definitely be the VWO, the emerging markets ETF, would be on the lower part of the totem pole for sure. And as an alternative to the VWO ETF, we have the Wisdom Tree Global ex-US Quality Dividend Growth ETF. This fund seeks to track the investments results of dividend-paying companies with growth characteristics in developed and emerging equity markets outside the United States. The ticker symbol is DNL. The fund management is by Wisdom Tree. The category is Foreign Large Growth. The benchmark is the Wisdom Tree Global ex-US Dividend Index. The total assets under management is $388 million. The companies are weighted based on annual cash dividends paid. The expense ratio is 0.42%. The dividend yield is 4.94%. The inception date is June 16th, 2006. And the total return since inception is 3.3%. So yeah, this one is definitely focused on international stocks. However, it's also focused on dividends. So it's kind of a mix right here going on right here. You have the international exposure and you have that dividend focus as well. So let's get into more details of the DNL ETF. All right, and now we're on the Wisdom Tree website to look over some of the details of the DNL ETF, the Wisdom Tree Global ex-US Quality Dividend Growth Fund. So this one right here, the net asset value is at $32.20. Closing market price as of November 18, 2022 was $32.10. And you got a price to earnings PE ratio of 15.63%, price to book at 4.41, price to sales at 2.46, price to cash flow at 14.10. 1 year right there down negative 28%. Zoom out more, you start to go up. Not as much as some of the other ETFs for sure. Like I said, with the VWO, I would not be investing a lot in this ETF compared to the other ETFs I would invest in, that I am investing in personally. Would not do that. 3 year right here, up 1.1%. 5 year up 2.4% is ETF, 10 year up around 4%, and then since inception up around 3.3% right here. And it's in the DNL ETF. And so right here, it has a country allocation, which is neat on the DNL ETF. You got United Kingdom at 15.87%, Switzerland at 10%, Taiwan at 9.1%, India at 8.72%, France at 8.64%, China at 5.86%, Netherlands at 5.79%, Canada at 4.74%, Sweden at 4.16%, Denmark at 4.13%, and on and on. You see right here the breakdown of the different countries of the holdings of this ETF, which is really neat right here on the website. And then the breakdown of the actual holdings. Let's see the weight of the top 10 holdings right here within its portfolio is 38.60%. This is a really neat feature of this website. Top 10 holdings right here. You got Taiwan Semiconductor at 7.96%. You have LVMH, Moet, Hennessy, Louis Vuitton at 4.56%. Unilever at 4.13%. Nestle, GSK, Novo Nordisk, SAP, ASML Holding, Tencent Holdings, Infosys, and then the remaining portfolio right here is 61.40%. So the top 10 holdings, 38.60%. As you see, the top 10 holdings on this one, very different than the top 10 holdings on the VWO. Yeah, Taiwan Semiconductor is there, and yeah, Tencent, but besides that, you start spreading out to Europe more in this ETF. So with these two ETFs, this is one where you could be invested in both if you want the emerging markets. It's something I'm thinking about doing. Since I'm not putting as much in VWO as the other ETFs, I could open up my portfolio a little bit more to some more international exposure outside of China and Taiwan and some more of Europe right here. And this would be an ETF you could possibly do that with. However, there are ETFs that focus primarily on Europe and those kind of markets if you want to be in that as well. But this one kind of broadens it out. So I put it on the list right here as an alternative. And so total holdings, it looks like, well, there's like such a small percentage right here, but total holdings of this DNL ETF looks like at 307 holdings. Let's get to the sector breakdown. So for the sector breakdown, you got information technology at 21.08%, consumer staples at 16.74%, consumer discretionary at 16.13%, industrials at 14.67%, healthcare at 11.79%, communication services at 7.05%, financials at 4.47%, materials at 3.59%, utilities at 1.32%, energy at 1.25%, real estate at 1.07%, and then other at 0.86%. So a nice breakdown right here in the sectors for the DNL ETF. All right, so those are some of the highlights for the DNL ETF from their website. All right, now that is it with my video of my top 5 favorite best exchange traded funds, ETFs for growth, dividends, value, and diversification, as well as alternatives to those top 5s. Hope you all enjoyed the video and found it useful, helpful, and educational. Take care.